What is going on, everyone? SteveyTheTrader here. Welcome to another video, and today I have something special for you guys. So, last week, pretty choppy week for me in regards to the $600 trading account. This market's kind of been really tough to trade, so that's why I haven't done any trade recaps. So I decided, you know what, let me try and post something for you guys. In the meantime, so I wanted to start another series called the Educational Series. So what I am going to be doing is teaching you guys about the stock market. So how to read candlesticks, support and resistance, and then later on trading strategies and what brokerages to use, volume, everything you need to know about trading. I know out there's not a lot of places for you to kind of get structured trading unless you pay for it. And I kind of just wanted to put this out here on YouTube for you guys. Um, Sorry, I thought I was like drawing something for you guys right now. So first lesson of the educational series is going to be candlesticks and how to read them. Sorry, my watch just went off. So let me see if I can get out of this line tool. So let's start off with the lesson. What is a candlestick? A lot of people don't know how to read them. They look at this and they just don't know what's going on. These are charts. So when we say charts, this is in regards to the candlesticks. Candlesticks show you where the price is going, right? So you can see price kind of moved up for the day, but people don't know how to read these candlesticks individually, which you don't necessarily need to do, but you use them to help guide your thesis as to when to get into a trade. So first off, I'm going to start you how to read a candlestick, okay? So we have a green candlestick and a red one. They're called Japanese candlesticks. Why? I have no clue. You can look that up, but that is what they're called. So when you're reading a candlestick, we have, like it says right here, you have the open. So right here at the bottom of the body, this is basically where price opens at. And then at the top here where it says close, this is where price closes at. And by what I mean by that is on a time frame, right? So let me show you guys so right here where my cursor's at, 30 minutes. So this means in a 30-minute time period, that's how a candlestick is formed. So you'll see right here, 7 o'clock and 7:30. So each candlestick is 30 minutes of time price action. So price moved up and down in those 30 minutes. So bringing that picture, so let's say at 7, right here, 7 is where your price opened up at. And then at the end of that 30 minutes, so at 7:30 it closes, this is where it closed. And when you see these, we call these wicks right here, wicks, because they look like candle wicks, right? And so that's basically where price went up, but it didn't close during that time frame. So that's why the body is very important to look at these candlesticks. So in regards to the color, green, basically you have price opening up right here and it moved up, so that's a positive move, so that's green. And then do it the reverse, just flip it over. It opened right here, right, but it went red, so price moved down and it closed right here, so that's why it's red. So that's how you get a red candlestick. A candlestick can open right here, move up, and that will be green. Because why? It opened, price went up green, but went down, so it's red. Because this is based on, sorry, it's based on a time frame. So in 30 minutes, sorry, let's move that out of the way for you guys. So in a time frame, the 30 minutes, right? We opened, you'll see, oh, whoa, what's going on here? Sorry about that. So to the right, you'll see the price, okay? So right here, 56.87. That is the price we opened at 7 o'clock on this candle. We did move up to 57.22, but price still pushed down. And then we moved lower than the, let me do this for you with an arrow. Come on. There we go. Okay, so reference that arrow. So based on that arrow, that's where price opened up at. And then we pushed up, but then the sellers pushed the price down, and right where we opened at, we crossed it, and we turned red. So it pushed all the way down, 56.23, which is the bottom of this. We pushed up, and then as soon as it hit 7.29, that's where price closed at on this red candle. So that's why it's red. Now reverse it for the green. Let me remove the arrow. Okay, so let's reverse it for the green candle. All right, you know what? Let me actually put a line for you guys so it might be easier. Okay, so next 30 minutes, 7:30. We're opening up 56.62, right? 7:30, we'll open up this time frame candle. Now, price did push down at one point. It pushed down 56.32, but buyers stepped in and pushed the price up. And then we crossed that opening candle price point and pushed up. Big move. And then price hit a high of 58.09 on that 30-minute time frame. But it went down, and then we closed the 30 minutes at 57.83 roughly. Okay, so that's how you read a candlestick. Could do another one for you guys, so you kind of get a good amount. Okay, let's do right here. So, or I could do a smaller time frame. That way you kind of get the idea of time frames. Let's do 5 minutes. So this is a time frame we actually do trade on. Okay, so every candle, when I say this is a 5-minute candle, so 5 minutes of price action in a 5-minute period. So you can see here, look, 6:30, 6:35, 6:40, 6:45, you get the gist, okay? So, let's start right here, 6:45. 6:45, the minute begins. Because you see right here, this is kind of how you could reference when a candlestick opens. You'll see right here, it will hit, let's say 9:30, and then you'll look, a new candlestick will form. So right here, 6:45, price opens up right here. 58.37 is where we're at. Okay, and then price pushed up. It hit a high of 59.55, pushed down, and then at the end of the 5-minute time frame, we closed around 59.27. Now reverse it. Next 5 minutes, 6:50. We are opening up at 59.27. Price did push up, and then it pushed down. We crossed. Once you cross that opening price, that is when you'll see the candle change colors. So we crossed down. That's a down move, so we went red. So we pushed down from 59.26 all the way down to 59.85, but we closed the 5 minutes at 58.92. Okay, so that's how you read a candlestick. I know it's going to take a lot of practice, and then all you got to remember is basically you have the body, and then if it's green, it opens from bottom up. If it's red, it opens from top down. Okay, and then these little lines, just remember they're called wicks. We call them wicks. Why? Because they look like candlesticks, the top of the wicks. And the wicks are important to remember just for future reference, but I don't want to get into that right now. I want to show you guys the next thing, which are pretty much specific candlesticks you look out for. So I actually have some for you guys. Let me pull them up right here. Sorry. Start off with a bullish engulfing pattern. Okay, let me actually close this one out for you guys. Let's minimize it and get back to Thinkorswim. Right, here we go. Okay, so a bullish engulfing pattern is when you have a red candlestick inside of a green one. Now, to remember the terms bullish and bearish, bullish is the term we use when you're thinking of going up, like price is going up, because bulls have those horns, so they're charging, they're going up, they're pushing forward. So that's what we mean by bullish. Bullish is a positive move. You think stocks are going to go up. Bearish, you think, so they describe bears as stomping on the ground. So that's where you get red moves. If you're bearish, you think stocks are going to go down. Okay, so you have a bullish engulfing pattern. This is, like I said, so you think price is going to go up, right? So green, so you take it as a super green candle and a small red candle before it, but it fits inside. You see how it fits inside perfectly? Okay, now let me show you the opposite. Bearish. You can see how it's just the opposite pretty much. Bearish. This green candle fits right inside of the red candle. You can read the description right here. I don't want to go into it. Pretty much, like I'm saying, the body will fit inside of this red candle, meaning the what do we call them? The sellers. So sellers are people that push price down. Buyers push price up. So it says the length of the bearish candle engulfs the previous green candle. So sellers are so aggressive that this green candle price action is engulfed by all the sellers pushing in this candlestick. So kind of let me show you guys real life examples in here. Let me see if I can find one. Let's see. I don't see anything here. Usually you can find them pretty quick. Nothing on this day. Let me do a longer time frame. 5 day, 5 minutes. Let's see. Okay, there's probably one right here because we had a. Okay, yeah. We had a really bad move this day. Look at this huge 5 minute candle engulfs literally this green one right here. So sellers are so strong. You see how price still moves down because of that, right? Same thing here. Look at this. This red candle engulfs This green one can fit in here, but the sellers are so strong, they still push price down for the rest of the day. Now, it's not always going to be like that. You usually use them just to go in and out of positions for short term. Because look, it went down, could have rolled this small move down, and it went down the rest of the day. Now, opposite, bullish, engulfing. Look at this. Clearly, right here. Look at this. This red one fits exactly in here. So that's why you see price still went up. Okay? See if we can find another one. We might not because the day was right here. This fits in there. It's a bullish engulfing. Okay. Maybe I could find one on the days we were positive. Right here, you see, this fits in there. This fits in there. Bullish engulfing. Okay. So those are patterns. You can look them up on your own time. Let me show you guys another pattern. So the ones I'm showing you guys are pretty much ones that I look out for on a day-to-day basis. There's a plenty of other candlestick patterns, candlesticks to look out for, but I don't look for them just because you don't see them that often. So they're kind of irrelevant. Not irrelevant, but it's, do you really want to learn like 20 different candlestick patterns? No. Because the ones you'll mostly see are the ones I'm pulling up for you right now. Okay, so Doji Candlesticks. They stem from that term Doji, I don't know where, but pretty much they're called indecision candles. So sellers and buyers, they're pushing price. They're like sandwiching it together because buyers are stepping in, pushing up, sellers are pushing down, and they just can't, come to an agreement of where price is going to go. So that's why you see, look, open, close, open, close, and then you have these large wicks because price moved up, it opened, pushed up, they pushed it down, they went lower, and then they pushed it back up. So there's a lot of indecision on that time frame. Same thing, sellers opened here, pushed down, pushed up, it was green, but then they stepped in, sold the price down, and it closed right here. Okay? And then remember, you have a high and a low of every candlestick. What's important is the body action. These are all Doji candlesticks. Next up, you have a hammer, because it looks like, we call it a hammer because it opened right here, pushed down on the time frame, and then buyers stepped in so strong that the high and the close are at above the open right here. So it's a strong push up. And then same thing right here. It's a red one. I kind of wish this was reversed. I'll show you guys right now in a second. But open right here, close here, buyer stepped in strong. So this is a hammer. I guess you could say it stems from looking like a hammer, but I'll show you guys an example here. Let's see, where would be a good day for a hammer? Okay, here's a doji right here. See how there's indecision? Where's a hammer? Look, doji, doji, doji. This is kind of a hammer. So the hammer, it doesn't have to be this way, right? You could flip it upside down, and as long as you have the wick and then a small little square body towards the end, that's a hammer. This is kind of a hammer. This for sure is a hammer. A hammer. Let's see. Some more dojis. Kind of a hammer. This is a perfect doji. Okay. Let's see. More dojis. You see how common they are? Look, kind of a doji. Doji. These are the ideal dojis, but I mean these are kind of fine. Doji. All right, let's look for a hammer. Hammer right here, square body, long wick. It takes time to like kind of really identify these candlesticks for you to just eye them out. Look, here's a hammer, wick, large body. Not large body, but a little square one. Long wick, and then the square towards the end. Doji, hammer, hammer, look, long wick. So there's different names for different candlesticks. But I'm just showing you guys the main ones that you will see, and then how they kind of help you with trading. Let me see if I could pull up a different ticker, but better. Come on, you're going slow on me, aren't you? Alright. You can see my lines drawn out. The reason you learn these kind of candlesticks and their names and what they kind of mean is because they can, if you add them towards other strategies, then they help you predict where price is going to go. So like price is pushing up, you see we're going up, we're going up, we're going up, and then you have a doji. So indecision. Okay, indecision means that they don't know where price is going, but they're, when you have it at towards the top or towards the bottom, that's indicating to you that something might happen. So if it's pushing up and then you get a doji, that might mean price will reverse, as you could kind of see right here. We're going up, doji, hammer, kind of a little hammer, doji kind of right here, hammer right here, boom, you have a massive move to the downside. And then once you guys learn about support and resistance, you have, look, doji and a hammers, and then you have a resistance right here. It's two different things telling you price might reverse to the downside. I'll show you guys on another episode candlestick patterns besides that bullish engulfing one. So look, right here, price is pushing down. We get this massive wick, and then we have this little wick right here, and it's not the best example, but you guys can kind of see, like, if you learn these candlesticks, put it with these lines, which is a support, price can reverse massively, and you could catch these big moves. Like I said, we had a very choppy week. It's kind of hard to trade. Yeah, so like kind of right here, these are other ones that you could, I might show. These are called spinning tops. And if you know what a spinning top is, it's kind of those things that you just like put on the desk and you spin it and it stays like that, right? So a spinning top would be defined as you'll have a top wick and a bottom wick, and then kind of a symmetrical like body in the middle. So if you get spinning tops towards a top or a bottom, price will usually reverse. Same thing as a doji. So if you have this up there towards this line I'm putting, that's two different things telling you price is going to reverse. Okay, so you guys kind of get the gist. I hope you guys know how to read the candlesticks after this. I kind of wish I had better examples for you guys. Tesla is known to have a lot of... Actually, I didn't type that right. Tesla is always having these candles. Like a spinning top, I told you right here. Usually there's a bottom wick, top wick, and then a body in the middle. That's a spinning top. The price push up, spinning top comes down. Okay? And then you have a kind of a doji right here. Price moved up. So it's all about just practice and looking around. I was hoping I could find a good example for you guys, but like I said, it was a choppy week. Very choppy week. I don't think I see anything, honestly. Sometimes you could go on a smaller time frame. Look, spinning top again. Top wick, bottom wick, little body in the middle, price move down. Pushed up a little bit, you have your dojis, pushed down. Okay? Now finding hammers. I love hammers. When you see hammers, that's like a strong indication the buyers or sellers are really stepping in to move price for you. Yeah, I'm not seeing hammers. I don't think. Yeah, I don't see anything. But yeah, so you have your engulfings, you have your hammers, you have your spinning tops, and you have your dojis. Those are all the main ones you'll see. Other look, here's a hammer, kind of long wick, and then you have the body right here, and price move down. But yeah, I hope you guys kind of got a good gist of candlesticks. Probably the next episode will be candlestick patterns, or probably support and resistance. Then I'll show you guys how to put candlestick patterns on top of that. But yeah, if you guys enjoyed the video, go ahead and leave a like, a comment, and don't forget to subscribe if you're new. And yeah, that's all I have for you guys today. Hope you guys enjoy the rest of your day and have a good one.